Hi traders and welcome to the Technical Analysis Market Watch on Friday the 18th of July. So I've seen a pretty subdued week with earnings season kicking off in the US, and we haven't seen a lot of big movements, but some of the key levels that we've been following over the last few weeks have certainly been hit and respected. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, and we can see that we've had a very steady week of selling really. You can see that basically from the start of the week all the way through to now, it's effectively been a sell-off in terms of candles, trying to actually rally higher, but actually closing on their lows, effectively almost shooting stars, three of them in a row after a doji candle. And then we've got two candles, actually three candles, where we've closed under the 20 moving average, which is a pretty significant sign for the Aussie because it very rarely does that, especially when it's trying to find a bit of a support level at the top. So look, you can see here we've got very heavy support at 68, and it's trying very hard to get back up there from the lows of today. You can see that we've pushed all the way down to 64.5, and it's pulled all the way back up to the 50 moving average now. And you can see here that it's nearly pulled its way back up to where what we would consider a reasonable level of support, because there was a lot of resistance right through here, and we've got a lot of price action. If you look at it, how congested it actually is over the last few months, you can see that nearly every, or not every, but the majority of the candles have actually interacted with this zone at some point. It's very, very strong. So realistically, if it pulls itself back up above the 65, again, we'll look for patterns back up to ranging above the 20 moving average and to these previous highs again. I think it's still sideways. It hasn't given us any indication that it's selling off just yet. I think it's just still going in that sideways motion with quite a big range. If we get a close below 64.5, that's a different story altogether. Like if it had closed down below where it actually did hit today, we'd be having a very different conversation. But for now, we look for support at the 50 moving average. Any series of higher highs and higher lows, we traded up to the 20 moving average in the first instance in scalping mode. And if we get a daily close above the 20 moving average, then we start to target the 65, 80 and 66 level again. So interesting watch on the Aussie. Not really an easy trade, but it is hovering inside a zone and it is its support. So we'll have to respect that and see where it goes early next week. All right, over to the US dollar CAD, and it's had a pretty good week, the CAD. We can see that it's continued on from last week's momentum. We've seen a little bit of a mini breakout, then pulled back to the 20 moving average, which is also a support line, as you can see, around that 136.70 area. The 20 moving average is also there, and off it went again. So pretty good trading. If you go to a 15-minute chart, you're probably going to see the patterns more clearly, as you can see. The higher low sequences that we talk about all the time kick this pattern off a level of support. So pretty good trading there. Hopefully you're able to take advantage of that, because I think it was a pretty easy trade actually. And hit straight into the 50 moving average, but it did touch the resistance zone at 137.80. You can see here, or just almost, but you can see there we've got support right through there and a lot of resistance that you can see right through this pattern here. So a break of that level is going to be really important for the longevity of this trade. You know, we've got effectively a double bottom pattern with divergence. As we know, it's attacking effectively the neckline of this pattern, but that neckline does coincide with a level of support, which is going to be resistance now. So just be mindful of that. If we get past that level, we will be looking for a move up to around that 138.60 and also a bit further onto the 139.20. But first of all, it's got to break that resistance. Pretty good trading here, though, I think. We've got a pretty strong pattern, a series of higher highs and higher lows on the daily, kicking off a double bottom, and that momentum has continued. No surprises that it found a little bit of resistance there, but if we get that breakthrough, I think we're pretty good for a couple of moves up to at probably the best 139 is where I'd be going in the short term, but there's a couple of parking spots on the way through. Be mindful that it could find a bit more resistance than we anticipate here. It's a pretty heavy level. If it does reverse, I'd be looking at points down to around that 136.50 as a level of target for the smaller time frame. But right now, you can see momentum kicking in and it's starting to do the higher low sequence. So pretty good trading really for the long side. I'm not really that keen on the short on the US dollar CAD. All right, over to the US dollar yen now. Another big strong week. Hit the target this week for us. You can see here, we started the week out around the middle zone here. and off it went. Pretty big trading all the way up to that 148.80. So you should have been able to get out of that trade pretty comfortably. It was a pretty solid trade. From last week, we've got the moving average 20 and 50 moving average cross as well, which that really kicked in at the start of the week as well. So at the end of last week, start of this week. So we had a lot of momentum, which is really good. Of course, MACD is still rising. A reasonable chance that it might break through. Actually, it hit that level and pulled back. This is why we always take our profit. We don't try to get too greedy in the first instance, because there's generally another opportunity to get in. But you can see here, we pulled back quite significantly, and then up again, attacked the high again. I think there's a reasonable chance that we might break through here. We've got a lot of momentum kicking in. We've got the high low sequence with a doji candle at the bottom of the trough, trying to break up past 148.80. If we get a daily close, especially if we're trading there early next week at around that 149.20, I think we could potentially push on to the 151. So if we do get a reversal and start to sequence lower high and lower low, we'd aim for that level at around 146.50, which is about where the 20 moving average will be by then as well. That would be the target for the short, but it looks like it's got a fair bit of momentum heading up. So I'm pretty happy with what the yen has done, and I'm looking to see a break here at that 140, sort of 148.80-ish. If we get a break there, I think we've got a good chance to actually push on and make another high, which will coincide with the resistance that we've got here at 151. All right, over to the dollar index. And we've seen another very strong week here. You can see that we've got obviously a lot of green candles in a row. We're above the 20 moving average now. Still look peppering that resistance at 98.80. There's no question about that. We've got a 50 moving average and a very strong support base that is proving to be a decent amount of resistance for it. 3 candles have attacked it and failed to break through, but the momentum is still very strong. And MACD is certainly rising. The 12 and the 26, we know we're about to cross, which is a good sign. And obviously the 20 and the 50 are starting to converge on each other. So there's a reasonable chance that the momentum is starting to kick in. If we get a daily close above the 99, we're going to start really looking for opportunities up to the 150 level. You can see here that that's the next real level of resistance, because you can see how strong that support was at this zone. Very important numbers on the dollar index, but I think it's doing all the right things right now. It's trading above the 20 moving average, which is very important, of course. All we need to do is break that level. If we do turn around here and we start to see a sequence of lower highs and lower lows, even a move down to 97.80 would be okay. That would be acceptable, because that's in the trading range, and what we're looking for is a healthy pullback for a long-term momentum move. That wouldn't be a problem. We'd be pretty happy with that. So if we see a move past and we start to see a rollover, and we see it back down at 97.80, we look for a rollover from that point onwards as well, which is around that 20 moving average area, and then try and finally break this level. So pretty good trading there. But of course, the euro is the one we're interested in, because this is the one that we would more than likely trade in that instance, being the inverse. And now we've had 3 decent days in a row underneath the 20 moving average and really peppering this support. You can see we've got heavy support here at that 115 sort of 60 area. If that breaks, you've got minimal support at 50 moving average. I mean, it could hold, but I wouldn't be relying on it wholly and solely. There is a bit of resistance there, but this is actually a zone. If we get a daily close, it's pretty straightforward on the euro, actually. If we get a daily close below 114.80, we're going to start targeting the lows at 113.20. Pretty straightforward. If we see a bounce up from this level and it's trading above the 20 moving average, then we're going to start looking back at that 117.80 to 118 level as a target for the upside. So pretty straightforward trading on the euro, very effectively the opposite of the dollar index. And the S&P 500, look, it's absolutely trying to close at an all-time high. You can see we had a very flat week, really. Like we're in earnings season now, and we're going to be waiting big results, of course, and big numbers to see if this market's going to propel up. I would be cautious on the S&P. I'd be waiting to let the next week play out a little bit. We're at all-time highs, obviously. Look, it's trying to close up there, probably will, but it's still a very low range in what it has actually done over the last couple of weeks. So I would wait for a considered breakout before we start getting excited about the trading the S&P 500. I'd wait for it to break through and then come back and test the break from the above. So we want to see a high and then come back and test this level before I'd want to get involved. Let it determine a level to aim for. If we start to roll over and we see a series of lower highs and lower lows, I'd be aiming for the 20 moving average in the first instance at around that 6,200, and then these highs that we can see over here at around that sort of 6,100. So pretty reasonable trading, but only scalping mode, especially while we're in earnings season, because we can see a little bit of volatility kick in these periods, of course. So I hope everyone's had a great week's trading. We've seen some really good results on some of the currencies that we follow. Hopefully you're able to take advantage of some of those. Have a fantastic week, and I look forward to seeing you all next week.